getting to $100,000 is the new $1 million. What? Seriously, if you can hit $100,000, you can definitely hit $1 million. Why? Well, that's exactly what we're gonna find out in today's video. Why does your net worth skyrocket after hitting $100,000? But before getting to that magic $100,000 marker, I think it's important to understand why it feels so impossibly hard to get to that first $100,000. Actually, let me take that back. It doesn't feel hard, it is hard. It's actually really, really hard. And here are the 3 reasons why. Reason 1, a low salary. Going from $0 in net worth to $100,000 in net worth, you're at the very first step. And in that first step, you likely are working your first job after college. If you are fortunate enough to be an engineer, you might be making somewhere in the neighborhood of $60,000 to $70,000. However, the median income in the US is just a little over $37,000. And with a low salary, a lot of that money is going to needs, to food, to shelter. So there's not a whole ton that you're putting away to contribute to growing your net worth. The second reason, high debt. When you are first just graduating college, you likely are straddled with student loan debt. If you are just lucky enough to borrow from the federal government, data shows that the average federal student loan debt balance is a little over $37,000. However, if you needed private loans for school, that number is well over $50,000 on average per student. As you can kind of see, a lot is stacked against you. If all the money coming in is going to needs like housing and food, and then you layer on debt, there's even less to go towards contributing to net worth. Reason 3, you don't know where to invest. And that's no knock on you, because when I was 22, 23 years old, I also had no idea where to invest. And according to Webster Bank, 36% of Americans also don't know where to invest their money. And so if you are just leaving your money sitting in a checking account earning 0.1% interest, that's not doing very much for you, and it's certainly not contributing to growing your net worth at all. But no matter how impossible it might seem to get to that very first $100,000, you need to do it. And here's a quote by Charlie Munger, the billionaire investor and also Warren Buffett's partner in crime and co-chair at Berkshire Hathaway. The very first $100,000 is a but you gotta do it. And I 100% agree with Charlie. You have to do it, because once you start getting the momentum going, well then that is where things get interesting. And now in this next section, we're gonna explore how net worth explodes after $100,000, all thanks to the magic of compound interest. So you've done it. You've worked your butt off. You've scrimped and scrapped and saved, and you've gotten from $0 to $100,000. Well, now is where it starts getting fun, because now is where you're going to have the turbo boost from compound interest, which Albert Einstein famously referred to as the 8th magic wonder of the world. To drive home the point, it's better that we start looking at some charts and graphs. And the assumption I'm making is that to get from 0 to 100 and beyond, first, we're investing our money. Second, we're investing into an S&P 500 index fund. And historically, the S&P 500 has had a return of 10.26% annualized. And I'm gonna also make the assumption that you're gonna be able to save $10,000 a year and invest that $10,000. So on the chart next to me, you're gonna see to go from $0 to $100,000 at a rate of $10,000 invested a year at a growth rate of 10.26% is gonna take us a whopping 6 years. However, assuming everything holds steady, to get to our next $100,000, so to go from $100,000 of net worth to $200,000 of net worth, it will take 4 years. And then to go from $200,000 of net worth to $300,000 net worth, it'll take 3 years. And to go from $300,000 to $400,000, it will only take 2 years. And the primary driver here is assuming we keep all of the variables in check. We don't change our assumptions for returns, we don't change any assumptions for savings. This is compound interest working its magic. Your very first $100,000 takes you 6 years, but your fourth $100,000, so going from $300,000 to $400,000, only took you 2 years. And it would be easy to extrapolate out that as you continue to invest and save more, you likely are getting a job, and you actually might be able to save even more. And so these timelines can be even further accelerated. As much as it is compound interest working its magic and the markets doing what they do, once you hit that magic $100,000 threshold, most likely you're gonna be gaining more financial confidence. At the end of the day, we don't just wake up and suddenly have $100,000 invested. It takes discipline and a skill set to get there. And by gaining financial confidence, investors are more likely to take more calculated risks that might result in higher returns. And in fact, according to a survey by the Federal Reserve, 69% of households with assets of over $100,000 feel more confident about their financial future compared to 45% of those with lower lower asset values. And as you cross the net worth thresholds, you can unlock more investment opportunities. For example, according to Vanguard, investors with $100,000 or more can access more high-yield investment products, which is typically not available with those with lower net worth. Now, I'm not saying that all these products are phenomenal, but if you have a larger financial cushion, you can take more calculated bets. Just as an example, I had an email in my inbox a couple years back from a real estate deal where they were raising money in the Boston area and they were actually gonna invest in a dispensary. Now, everything was already laid out, but what they were asking for is essentially debt note. And the minimum investment sizes were $50,000, $100,000, and $150,000. And at each individual tier, you were gonna be guaranteed a return because again, it was a debt note. At the $50,000 tier, it was a guaranteed annualized return of 15%. At the 100,000, it was like 18%, and at the 150,000, it might have been like 20%, which again, is an insane amount of money to just cut a check for $150,000, but getting something like a 20% return on $150,000 is absolutely insane. And now let me wrap with some tips for getting to $100,000. The very first one, start early. 18 years old, go ahead and open a brokerage account, start putting money into low-cost, broad-based market index funds. Personally, I look at total market index funds like VTI, but you can also just look at S&P 500 index funds like VOO. And just as an example as to why starting early is important, let's assume you invested $500 a month into the S&P 500, assuming a 10.26% annualized return, and you did that until you were 65. At the end of it, you'd have a whopping balance of $1.56 million. Incredible. But if you could have started just 10 years earlier at 21, by the time you were 65, you would instead have a balance of $4.24 million. That is the power of starting early. And just to really drive home the point that you should focus on the main thing, when I left pharmacy school, I went into pharma sales, and my salary there was $78,000. Within 5 years, I ended up jumping to a small tech company, and then I jumped to the largest tech company in the world, SAP, where I was an enterprise account executive making $250,000. Now, every single time I changed jobs, it was a calculated risk. But my point is, by doing that and making strategic jumps, I substantially increased my salary, and guess what? That allowed me to substantially grow my net worth because I had a lot more disposable income that I could save and invest. Number 2, be consistent. The stock market, where the majority of us are gonna get the vast majority of our net worth gains, doesn't just go up and to the right indefinitely. It goes up, it goes down, it goes up, it goes down. But the general trend line is it goes up and to the right. So don't get spooked when the next big crash happens, because as long as you're young and you're early in on your investment journey, you will recover and you will make many folds back. So be consistent with what you contribute and when you are investing. And my third tip for reaching that $100,000, get the bag. Listen, for a lot of us, I know it might be sexy to come onto YouTube and try to find these side hustles to make a buck here, make a buck there. But the reality is, the majority of people should focus on the main thing and keep it the main thing. How can you make more money at your job? If you can't, then you need to change jobs to make more money. It's been proven time and time again. Employees who are more willing to jump from job to job make more than those who are willing to just stick around and get their 2, 3, 4, 5% inflation adjusted raise. And if the particular industry you're in just isn't that lucrative, can you make a career switch? Because if you want your investments to grow, you need money to invest first. People always kind of come with the, oh, you know, like I want to be a millionaire and I'm just going to wait for investments to grow. No. The way to do it is to get the bag at your day job and invest that, and that will truly accelerate your ability to accumulate net worth. Now, I certainly was an outlier in the sense that the side hustle that I was kind of interested in did take off, but if it wasn't for content creation and YouTube, TikTok, and Instagram, I would 100% still be at my corporate job, trying to get the bag, investing as much as I can so that I could retire early, because that is the most straightforward way for the most amount of people to substantially increase their net worth. So avoid the side hustle trap and focus on your main hustle. And that's it, folks. That's the video. If you have any questions, comments, drop them down below, and I'll catch you on the next one. Peace.